Hi, folks. This is Lee with the Market Sense for the week of July 30th, 2019. The charts in this presentation are provided to us by Gettess and come from the Trade Navigator software. And before we even get into the bond market here, let's get the nasty stuff out of the way. This is a brutal week. It's brutal, and it has nothing to do with the Democratic debates this week. We have a Fed meeting where the Fed is expected to lower interest rates, probably be announced Wednesday afternoon. And no sooner do they do what they do than we're going to get a focus on the monthly employment figures for Friday morning. And actually, there's employment figures Wednesday, Thursday, and Friday. So, bunch of stuff out there to jostle the market this week. What I am afraid of in general is there is probably at least a quarter point, maybe more, of an interest rate cut priced into the markets. And I'm afraid they might get that, and we get a buy the rumor, sell the fact thing, where they kind of drop in disappointment because, well, we got the rate cut, now what? I'm not, predicting that. I just think it's a distinct possibility given the way they behaved. And so, any analysis I do aside from that, you got to kind of take with a grain of salt. Now, here in the bond market, you can see they've kind of been a little bit sideways here recently, and this week has just been very, very quiet, waiting for the Fed. I think we're primarily looking at the 155.16 area up here and 153.0708 down in this vicinity. Now, we'll call those support and resistance. Probably the best indication would be if they break one or the other. But I caution there's also a tremendous opportunity for a false break in either direction first before they go the other way. But I think that's kind of the way to handle it. I'm not sure I'd be wanting to sell up here and buy down here given the sideways pattern. I think looking for them to move out beyond those areas is the smarter way to play it. And again, you don't want to have an order sitting there Wednesday afternoon, and you don't want to have an order sitting there Friday morning. So very, very difficult environment here. Stocks are sort of the same in that they're quiet. They're quiet right up bumping against the all-time highs, of course, but this week has done very little, which is to be expected. I suppose there is a chance that they could hold, well, this is actually just below 3,000, but let's call that moving average roughly the 3,000 area because a couple points is close enough in this environment. It's possible that's support and it'll just drive them back up again. The first target we'd look up here is about 30, 44, 45 up in that area where the upper Keltner and the projected high are. I don't really want to call those resistance because if they get up there, I sure don't want to sell them. But that is a target to look at. The other critical area is all the way down here at 29.68. And particularly if they get below that area, that might be really significant. That would be taking out the lows of the last 3-4 weeks. And that, well, it could only lead to the middle Keltner, maybe, but that could be a much more significant thing. And again, that would be an indication that maybe we've got to buy the rumor, sell the fact thing, and that we get a rate cut and the market drops anyway. I just got that feeling. That's not analysis. That's just sort of a scared person looking at the markets, I guess. But that's, I just think that's a distinct possibility that you got to watch out for. And as with the bonds, you have to watch out for a false break here. Summertime trading a little more thin than most of the rest of the year. That false break is a distinct possibility. So that's what we've got for you today. I hope you can find something profitable to get into.